Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on YELP GWPH PCLN NVDA and Tesla. So YELP did close over the middle Bollinger Band today. Slowly but surely, the bulls are trying to recover from this dip. We do have the resistance, the high of yesterday that was up at 34.14 that the bulls need to break in order to start progressing and try and turn this thing around. Keep in mind, look at the bounce that we had play out beforehand. It played out for weeks and weeks before the weekly bear flag was confirmed. This bounce is not impressive, to put it bluntly. The bulls are seeing some nice upside, and there's some decent gains to be had. But in terms of trying to reverse this trend right now, this is just slow and steady to the upside. I'm not seeing anything that wants me to be bullish on YELP right now. The weekly time frame, we are seeing 2 green weeks in a row. That's good for the bulls. And ideally, they want to close over these exponential moving average resistances. Goal for tomorrow is close over 33.36. And ideally, if it's a strong close, over 34.18, the 4-period exponential moving average. But as of right now, I'm just being very patient if looking for a bullish entry on YELP, just because the bears have been in control for so much time since the earnings. So in order to be comfortable with a bullish entry, I want to see another pullback in a sense to form a higher low compared to 32.10. And we have these lower wicks, but I want to see a nice solid pullback, have our clear lower high here to break 34.14, form a new support level, make an entry where we have a nice short amount of risk before hitting stop losses by utilizing recent supports, and then look for the bulls to change that trend. Otherwise, I can patiently wait for the trend to change so I know that the bulls have momentum, because right now, I do not trust that the bulls can turn things around after so much weakness recently. GWPH all-out dump continues. Bulls bought a little bit of the dip today, but the biotech sector weakness combined with losing key support on GWH was pretty much perfect timing for the bears. And we've seen some high bear volume recently. We are not closing near the low of the day, and that's what stands out because we did close near the low of the day the past 2 days, showing momentum to the downside. And we had that support at 112, so we bounced off of 114.37. The bulls are trying to form that as the higher low. Need to see a green day to try and turn around this. Same thing, I don't like GWPH, I don't like a bullish entry until the bulls prove to me that they can turn around this clear lower high, lower low pattern that has been in play for the last 5 months. The bounces have been very short-lived, there has been no bull power behind them, and the weekly time frame is losing the middle Bollinger Band for the first time in almost 2 months. If we close below 120 tomorrow, that level will be lost. So we can be looking for things to turn around, but the biotech sector is going to have to turn things around as well to have some of that momentum helping the bulls on this bounce. Otherwise, we will be looking for potential lower highs and lower lows to continue for now. PCLN, nice buying of the dip by the bulls. This is a bullish reversal hammer getting back over the middle Bollinger Band and establishing a new support level. We didn't have much support after this middle Bollinger Band. We were looking down at 1739. So it's nice to have a closer support to be watching. That's at 1755. And that's the key level for the bulls to maintain the higher lows now. And we need to see a green day tomorrow to confirm this bullish reversal candlestick. And the next resistance is up at 1788. So if the bulls can see another green day, keep that middle Bollinger Band heading into next week, they will still have some nice momentum on the daily time frame. This consolidation has been pretty contained. No big red bear days. We did see a big turnaround yesterday, but because we had so much upside before the bears took over, it wasn't a dump day by any means considering or comparing to the day before. So the weekly time frame is a potential bearish candlestick. We're still holding exponential support. The 4 period is holding. It would require losing weekly exponential supports to be a red flag here for the longer term bulls, because those levels have held all of 2017 and they are currently still holding. So the PCLN bulls, nice follow through day today, saw strength at the end of the day when the S&P 500 was seeing some weakness. So the question now is, can the bulls follow through with another green day tomorrow? NVDA, also a bullish reversal candlestick, bouncing off the lower Bollinger Band. Bulls need to see a break of 101.25 and a green day tomorrow to confirm this candlestick and be looking to see some short-term upside. So we are keeping a higher low pattern intact compared to 95.17, and now the bulls, we're going to see how much power they can get back to the upside. This was one of the lead bulls to be watching in response to the S&P 500 today. There was a very strong correlation to the S&P 500. So if we see the S&P 500 bulls show up again tomorrow, we'll be looking for a break of 101.25, which will have us looking at 102.37, the high of Wednesday, as our next resistance. Weekly time frame, bulls really want to close above 103.47. That would take a big day tomorrow. Otherwise, we lose this weekly middle Bollinger Band for the first time in over a year. That is a red flag for the bulls. We have still this key support at 95.17. That would be a big time red flag if we lose that level. But as of right now, still holding on to that support is keeping the bulls in the longer term trend okay for now. But again, losing this middle Bollinger Band for the first time in a year is absolutely a heads up after holding it 5 of the last 6 weeks. Tesla, this is healthy consolidation. We're seeing contained volume decreasing, normal and healthy, and this is a bull flag pattern right now. You could draw a parallel support and resistance channel on this pullback, and we're holding exponential supports. The low of the pullback right now, 294.10, is a key support to be keeping an eye on. But if we see the market bulls show up, Tesla is positioned to see new all-time highs in response to this continuation pattern. If we see an increase in bear volume, a loss of exponential supports, that will negate the bull flag, and we'll look for a pullback back down towards 287.39, previous resistance, now support. But as it stands right now, this is bullish consolidation, which would indicate continuation. So we need to be watching the exponential supports tomorrow and watching for a break in this volume pattern. That doesn't necessarily have to be tomorrow. If it's not tomorrow, it will be early next week, and the break that volume occurs in will indicate short-term direction. If it's a bull break, nice big green volume, we'll be looking towards the all-time high, and if it's a red break with increased bearish volume, we'll be looking back down towards 287.39. So pretty important next couple of days to see if this consolidation can maintain nice and healthy. The weekly time frame is not a bearish reversal candlestick. We are rejecting from the upper Bollinger Band of 302.32, but that is not a significant upper wick of profit taking where we currently stand. So I appreciate you watching. We'll check back in over the weekend. See you then.